Stock market is just absolutely crashing today. It's one of the worst crashes since 1987 in Japan. Absolutely crazy what is happening. So the Dow drops 1,000 points and Japanese stocks suffer the worst crash since 1987 as markets quake around the world. Also, the Canadian dollar hit a 2-year low in the early hours of this morning in FX trading. So not a good sign for the Canadian dollar. But if you want to look at what happened to the Nikkei, it is just unbelievable. It is down 17.79% in the past 5 days alone. And you've also had the Japanese yen that is soaring, which is actually sending the DXY down right now. If you're not clued up on what the yen carry trade is, I would Google it after this video and check that out. Not going to discuss that in this video. A scary Monday that started with a plunge abroad reminiscent of 1987's crash has swept around the world and pummeled Wall Street with more steep losses as fears worsen about a slowing US economy. Is it really just a slowing US economy? I think it's a slowing global economy that people are concerned about. You know, it's been bad news is good news, bad news is good news for so long with the stock market, and eventually it corrects the fundamentals just like any market, the housing market, all these different things that have been in bubbles. I mean, we've had so many bubbles since 2020. You've had the SPAC bubble, the green tech bubble, the AI bubble, the crypto bubble, all these different bubbles just within a short space of time from the economic distortions that the government created during the pandemic. And now all those economic distortions are coming to fruition in the form of a stock market crash. And it's quickly turning into the everything crash, which is worth highlighting. So the VIX in just the past 6 months, but really it's just the past since July 16th, is up 193%, as you can see here. So absolutely crazy. In the past month alone, the VIX is up 212%. So volatility absolutely surging. This Friday, we have a report for unemployment happening in Canada. That's going to be very telling. I do not think that that's going to be a good report at all. I think the economy really dropped off in July, and that is going to start to be realized, especially with unemployment. And we're really going to start seeing unemployment spike up. That Nikkei collapsing, not a good sign. You've had Bitcoin that has really wiped out some gains. I mean, it literally since July 29th, it's down 23.3%. Just insane volatility. Obviously, you guys know I'm not a big fan of crypto. It's just basically like a leveraged Nasdaq ETF. You got crude oil, which has kind of been barcoding and kind of gone sideways today. Not really done anything, but obviously over the past month, it is down significantly. It's off 11.3%. You've got gold that sold off today, and that's what you would actually expect. You know, the mainstream media comes out and constantly says, oh, you know, gold should be doing great in times of crisis, but actually what happens is because liquidity dries up, gold's the only thing that's liquid, people end up selling that as well. So you see gold decline. Usually it doesn't decline as much as like the indices do, like the Nasdaq and the Dow Jones, and it's one of the first to recover. But always in these market crashes, you see gold decline. Now, there were major moves in the bond market today, and that's been really interesting to watch. I mean, there's just so much going on right now. It's absolutely crazy. It reminds me of 2020, actually. The market's falling apart this quickly is just reminiscent of 2020 and what happened there. So the yield curve in the United States is getting closer and closer to that uninversion. In fact, if you look at the 210 spread, it did uninvert at one point, but it didn't close uninverted. And again, that's very indicative of recession in the United States. Obviously, the United States is Canada's biggest trading partner. So if your biggest trading partner is heading into a recession, it's not a good thing for your economy when your economy's already fundamentally weak because households are over leveraged to the max right now, and they're actually beginning to deleverage because the housing bubble is imploding. So things just could not look worse for Canada. So even gold, which has a reputation for offering safety during tumultuous times, slipped about 1%. Again, we said though that gold typically does that in market crashes. The Fed could rise ride in on a white horse to save the day with a big rate cut, but the case for an intermeeting cut seems flimsy. You know, I don't know. If you see this really start to go bad and just continue the way it's going, I think they could do an emergency rate cut. But is that going to be the white horse? I do not think so. I mean, it wasn't in 2020 either. It was the government fiscal response, which was the white horse. The government came riding in, doing all of this stimulus money, because unfortunately, when these things happen, people just demand more and more government intervention. They want more from the government. And then those same people complain that the government is too big a couple of years later. Goldman Sachs economist David Miracle, it looks like Miracle, but I'm sure I'm pronouncing that wrong, sees a higher chance of recession within the next 12 months following Friday's jobs report. I don't just think it's the jobs report. I mean, I would ignore that actually and just look at the yield curve. Remain focused on what goes on with the yield curve. Going to be incredibly interesting. The reason why we focus on the United States and what's happening there is because it has major implications on the global economy and what's going to happen in other countries that are heavily dependent on the United States, like Canada, for instance. So this is really interesting as well. When you look at what has happened with the Fed cutting rates and basically the 2-year, you can see that the Fed has typically actually started cutting rates and then you've had the crisis event. So if you look at interest rates, which is this blue line here, you can see that every time interest rates have been coming down here, then you've had a crisis event. So it's the same with Lehman, or you could say these are like apex events, but you can see that every time that they've started cutting, it's actually been before the apex event. So it's going to be very interesting to see what happens there. Obviously, what's going to be most interesting is what happens with volatility. I mean, at one point, the VIX was at 55 today, it opened up at, and it has kind of trended lower throughout the day. Obviously, really interesting what's going on with the Canadian dollar. So the Canadian dollar is up about 0.5%, but if you look at what happened, you saw it actually get down to 71.79. So it actually set a multi-year low today. So it's no wonder that it's had a bounce. Normally, when you hit these big lows, you're going to have some sort of buying activity at that. But again, it's not a good sign that you're hitting a multi-year low there. A lot of people didn't even realize that that happened because it happened in the early hours of the morning, obviously probably coinciding with what was happening with the Nikkei, that's selling off as well. So you've just got these markets that are crashing right now. They're in complete free fall, and it's very interesting to see what's going to happen moving forward. Obviously, a lot of people are placing a lot of weight on what the central bankers are going to do. And as you guys know, I don't believe the central bankers really have that much power. And especially since 2020, it seems to be more the government's fiscal response that is going to have a power. And interestingly, the bond market, which is reacting by falling, especially at the long end, is not obviously predicting a lot of growth and inflation in the future. And I would follow what the bond market is saying, not what you think is going to happen. Does that mean that things that you need are not going to be going up in price anymore? No. I mean, the CPI is completely broken and it's not accurate. But in terms of what the markets believe, they believe CPI inflation is going to remain low. Now, what will really be interesting is how this affects the Canadian dollar. And when the Canadian dollar really starts dropping at these levels right now, you're getting to down like 5% year over year. Is the bond market going to start rising at the long end in Canada because it's predicting more inflation just due to the currency selling off so much and the fact that a lot of goods that are brought into the country, especially food, which are things that people can't afford right now. Obviously, we've got food bank reliance at record highs right now. People can't afford to eat in Canada. What's going to happen? It's going to be very interesting to see. So anyway, we'll continue to monitor this market crash and see what happens, guys. And if you've enjoyed this video, I would highly recommend that you check out this video here. And if you're looking for a VPN to protect your privacy, go to expressvpn.com/marketmania. That's the affiliate link in the VPN that I use myself, the most reliable one. I will see you in the next